Hello everyone, good afternoon. It's about 2 p.m. here in Istanbul, Turkey. Merhaba, nasılsınız? And we're going to go over a technical analysis for Bitcoin to give an overview of the market. The market has been trending and we're going to jump right into it. No spiel except for watch my previous video. Only I'm releasing a course version 2.0 that's going to have new strategies, refined strategies, updated methods, and golden rules for trading. Only 100 physical copies will ever be made, and only 100 people will ever be able to get their hands on this. I'm keeping it a very limited edition release for the people that I firmly believe have a good shot at trading. So take a look at my previous video, and if you're interested in this course, please do DM me, and I'll be more than happy to give you more information. So let's take a look at Bitcoin and how it's been trending thus far. Whenever I do a technical analysis, I do something called walk down the line. I walk down the line, I look at it from a high time frame, and I go to a low time frame as well. Okay, so we're taking a look at here, and this has, I'm just confirming this 14 bars. Yes, there is, because this here, the RSI moves in a 14 bar measurement, the length. So for the monthly, I see bearishly diverging RSI since literally October already, and we're still downtrending. We're about 11 days in the month so far, but we don't see any type of bullish divergence or any relevant candle that's indicating a good support. For example, here in the monthly, we see wick regions that actually get higher and higher each month. Higher, higher, and then higher. That's indicating a really strong possible support going forward. If we're finding support for 3 months in a row, you can easily assume that there could possibly be a reversal for the upcoming month. If we see here, we're seeing the wicks get to a lower region. The volume is about halfway. It's proportional to the month of December so far, based on how the moving average is trending. If I keep walking down the line, I'm seeing that on the 2-week RSI and MACD, we're still trending to the downside. We see the histogram peaking really low right now, is still crossing negatively. We see the MACD crossover in the month of November, and since then, we've been getting a very bearish type of movement to the downside. This 2 weeks so far, we have 5 days left to close this week. We're getting a very bearish type of candle. Here, we recovered this particular week, tried to make a run, but unfortunately, we get this reverse dragonfly doji that's indicating that the bulls have lost their steam, so therefore the bears end up having momentum coming to the downside. On the weekly chart right now, we're seeing for the first time and in an incredibly long time, we're going to have to go to a different chart here on a different exchange. For example, I'm going to go to Coinbase here for you, and this is on the weekly chart right now. And the reason why I'm going to a different exchange is because we're seeing that there's more activity and there's more information. It's only been recently added to a few exchanges. So for example, this is on Coinbase. We have not seen the moving average below 55 in a long time. The moving average gives us a compilation of an average taken over a sample of 55 candles. 55 because it's a moving average. And with it being a moving average, it gives us a really average price of 55 bars total. So it moves a little slow, and we would like, the more bullish it is, the higher it's going to stay above this particular average. For example, here when we see it very bullish, where it trended from March 2020 from 4,000, 5,000 to the $65,000 range, we see it move very much so to the high side. But think of a moving average like an elastic band. When it goes too far away from this elastic band, it's going to snap back to the 55 moving average, like right here, for example. So here we see it come right here. It tries to puncture it multiple times with the wick, with the wick, with the wick, with the wick, with the wick. The body gets below here, but it doesn't have that momentum to break to the downside and close. Even though it's poking its body through, it needs to have a successful close below it to consider a type of trend reversal. We have not seen it below this 55 moving average since May of 2020, which has now been about 600 days, almost about, I think that's 21 months. That's a very long time. And now, for the first time in 21 months, we actually have an opportunity to close below the 55 moving average if this type of momentum continues. If we keep going down the line to, for example, on a 2-day, we also see that it's been a long time since we've closed below. Let's go to the 3-day, for example. Okay, the 2-day moving average. We'll start here actually. We tried to close below it, and we did close below it once, twice, thrice, right there. Okay, here were just attempts. So for a consecutive 3-day period, or 3 2-day period, which is 6 days, we closed below it. And the last time that this happened was 175 days ago, which was about 6 months. And now we're doing it again. So we can say that on the 2-day chart itself, we're seeing bearish momentum continue to the downside. Although the 1-day is now starting to show some bullish symptoms. Some bullish symptoms such as the histogram steadily going its way up now. The MACD is starting to converge towards each other. And this is starting to happen because we are getting a series of bullish candles. The first bullish candle that we got was this right here, okay? We got this type of small pin bar dragonfly doji. This was an inverted pin bar right here. And now we have a huge dragonfly doji that ended up rejecting 5% to the downside. Okay, so is this momentum going to continue? When this rally ended up rejecting 5% to the downside, it carried a lot of alts to the high side, to the very high side. So we don't know if this is going to continue yet or not. So based on the momentum that we see based on the medium time frames, such as the 4-hour to the 8-hour, we're seeing neutral RSI. Okay, neutral RSI is between, say, 35 and 65 to me. The MACD, yes, is on the lower side, but don't discount for a moment that it's not possible to get even lower than that. So we have to be extremely cautious at the moment. So on the bigger picture, the reason why we bounced where we bounced right now is because we see this. This low right here that you see on this candle is $39,500. If we actually go back in time, we see that this is a very strong type of support right around this range, okay? If we go, we actually see there, we see this region, we see that region. So if you notice here, this was a major resistance around this range. And I'm going to do it on the body to body. Like, let's say we go to the even the weekly, right? The weekly is a really good indication. We're seeing that a wick rejects to the 39.5 region here for the first time, and then it retraces a large amount. It ends up retracing about 30% in that bull run in January of last year. And then it goes up, shows no support here whatsoever. And then it drops to the downside. It tries to get back up for a series of over 28 days where it rejects. It tries to get back up. This resistance should turn to a support, but it didn't. And now it stays as a resistance. It breaks up to the upside, then the bears try to push it back down, but the bears end up failing. And we actually get a rejection to the downside of 6%, and then the major bull run continues for the next 105 days, which is about 3.5 months. And now, but first of all, before it happened, it tried to be tested one last time here at $39,600 region, okay? Tried to test it. I should probably get on my exchange. So right here, this is a little bit better because I see 39.5, okay? So not only do we get a series of rejection there, but we get a rejection there, and then to the upside. Here is a rejection to the downside. So then we come back one last time, okay? The open right here, if you look on the O right there, okay, the O is 39,846. Here was the low, the L right there, is 39,500. So we know that it's going to test this region right here. And that's a very, very strong factor. Will it actually hold, and will we get some sort of retracement to the upside? That's what everybody is thinking about right now. Because if we do get a retracement to the upside, even the most bearish type of retracement will give us a 28% rally, where this right here, that target, the green line, or this region right here, the interim swing high, would be a very useful place to target, which is still considered a very low retracement because it's only 38.2% of the Fibonacci retracement. And that's called a dead cat bounce. If a dead cat bounces, it's still going to carry the market to an extremely high price point. So right now, we're at a point where the bears are wanting to drop it to the downside. We're trying to hammer at this particular support region at 39,500. The bulls are trying to keep it up to try to rally it back up to this region right there, about 50K. So we've had this major trend line over here, where if we take a look backwards, okay, we got this major trend line. See this right here? I would definitely consider this something very valid, okay? Something just like that, where we get a rejection up there, rejection, rejection, rejection. And here we're getting a rejection, rejection, and pretty much a rejection there as well, I would say, okay? So basically this holds to be a very true channel. With it being a true channel, and then we finally break above it, we rally 10-11% in this third week of December, which brought alts to a really good price point, especially Luna, if we remember its rally. Okay, whenever you see a coin rally like that, a Bitcoin rally like this, a lot of coins will rally with it as well. So if we see Bitcoin move, for example, 5%, alts would generally move a multiplying factor, which means that if Bitcoin moves 5%, coins could move 2-3 times more than that 5%. So it's a really good time for BTC. If BTC moves, it's a really good time for us to start trading alts as well. It gives signal for the alts that, hey, it's going to probably rally. So now that it broke above there, tried to get to a higher price point, but unfortunately this 50K price point was too much for it to handle. So we ended up retracing back down to the bearish side. And now we're hitting this channel support. If we're taking a look right here, this channel was previously resistance, and now it's acted as a support for the past 5 days now. So we're wondering, and then when you combine it with the 39.5K support, we're wondering, is it going to go back up to the top side? Is it going to handle a huge rally to the top? We don't know yet. What we do know is that there's a major resistance right now. The major resistance is at $42,500, $22,400, right around this particular price point. Why do we say that? Because you got rejected once, you got rejected twice, you got rejected thrice. It might even be lower. It might even be around these regions right there, around 42,200. If we take a look here, we're seeing really much so tons of rejection. It depends on how you're drawing it, right? You might even be able to say that, hey, the rejections are right around here, around 42K. So I would consider this a range of rejections that's happening. And right now, on a lower time frame, we see that there's 47 minutes left for this particular 12-hour candle to form. And because there's 12 hours left, we have to say for a fact that it's very bearish right now. We're getting a type of candle here called a shooting star candle, which implies that the bulls have pushed their way up to the top side, but the bears ended up pushing them right back down below the resistance range that we see between 42,000 and 42,300. So now that we've been pushed back down, the sentiment for the bulls to rally has been lost. Therefore, we have to break above that particular price point to achieve a higher high, where the market sentiment would now be changed over to bullish. So after that gigantic rally that we've seen, where we went up 8% from that low of 39.5, that where the support's been established for a long time, we attempt to rally huge, but we failed breaking that resistance that I was mentioning at 42.3. So what happens is there's most likely going to be some sort of retracement using Fibonacci retracement and a combination of relevant support regions. There could be another retest right around perhaps here. The range could be even greater. So in order to keep this bullish sentiment alive, what needs to happen is we must have a bounce somewhere. not only do we need to have a bounce above that trend line, but we need to break above this particular resistance that's been rejecting for 5 days now. The longer that it takes to break a resistance, the more likely that it's going to fail. So on the bullish side, we bounce right above these regions. It may be a range of, I'm not sure. As long as it's above this particular channel, we can have the potential to break to the top side. And if we do, we're very much so going to target roughly around the $50,000 region that I mentioned up to over here. That's going to be a very viable target of the 382 Fibonacci retracement of the overall structure. If we have now the bearish sentiment is that if we have a bearish run, we're going to break back down to this channel. And this won't even matter, this channel anymore, okay? It won't even break, and it's going to completely break back down. That huge rally that we had of 8% retraces too deep. The deeper of a retracement, the less bullish sentiment that we have. So right now, what I'm personally doing is I'm waiting for the market to make a decisive decision, whether it's going to bounce somewhere or not. If it does get a lot of bullish sentiment where we're starting to see volume pick up, really good candles on this next retracement, it's going to signal to me to enter because alts are most likely going to rally as well. Just to give you an example, CHZ rallied pretty hard. Bitcoin starts to rally at this time there, around 18 o'clock, okay? Now, just an example, CHZ rallies at the same time, 18 o'clock for 18%, okay? Rose, 18, unveil, 18. So all these coins are following Bitcoin. And Bitcoin is going to dictate what happens for the next week or two, depending on if it retraces back down to this channel or if it breaks to the top side. So if I had to lean one way or the other, I would have to say I'm unsure because I'm a reactive trader. I react to the market based on how everything is going on. I'm going to make my decision in that particular moment. I would suggest to spend less time predicting and more time reacting. As you react to more data coming in, it can give you a better and more well-formed decision-making abilities. So right now as it stands, I stand completely neutral and I will wait to see the reaction near the channel or some retracement range, and especially here as well if it tries to break to the top side. Anyways, I hope that you enjoyed this technical analysis video. I urge you to consider my course version 2.0. It sells for $1,750 and it's going to be a very limited edition release. So anyways, I'll see you for the next video. I'll make sure to give you more Bitcoin technical analysis videos because I've been keeping up with BTC for my private group a lot lately, although I want to do it for the public as well because I think everybody should have access to information. Have a great day and thank you for watching my video. Bye now.